Hey everyone, welcome to my channel and welcome back to my subscribers. This is Bald Guy Money. I am Bald Guy, and today we are responding to a question I received from a viewer who calls himself Max Strength Holistics, and we're going to cover his face because we don't wish him any ill will. We welcome free speech, we welcome criticism and questions, and what he said when referring to silver is that it hasn't gone up in over 10 years. So I pulled up a chart covering the time frame that he referred to and asked myself the questions. Is he right? Is this the correct way to look at silver? And what is he missing, or what am I missing? So be sure to watch this video to the very end, because when it comes to this top 10 global asset class, and yes, silver is a top 10 global asset, we are going to get very technical. As always, this is not financial advice, and please take a moment right now to drop a like. That like tells the algorithm you think this content should reach more people, and you've all been very supportive. The community has been very supportive lately, and my content has been getting out there, reaching new people. Our community is growing, and I want to thank you all. It's because of the likes you're dropping, and I'm hoping I can count on you for this video to do the same thing. Now, getting to the point of the video, and what I want to say to new and experienced stackers alike is this. No matter what you're buying, especially when it comes to precious metals, there's going to be no shortage of people who are going to criticize you. And let me know in the comments actually if you've met with some criticism, if somebody's taken a shot at you for stacking precious metals recently, because to be honest, I'm hearing it a lot right now. And that's just probably where we're at in the 21st century. Everybody's got an opinion, and it's amplified by the advent of the internet. But I'm not saying that the person who left us this comment is being unfair. In fact, I think for the most part, he was very respectful and asks a valid question. And this is where my job comes in, because picking 2 points on a graph and saying point proven is not the correct way to actually evaluate an investment or a savings vehicle. Because no matter what you invest in or what you save with, there are going to be highs, there are going to be lows, and there are going to be blow-off tops like gold and silver stackers experienced back in 2011 and 2012, when there was a lot of interest in precious metals and a very tight supply. And why it's important to talk about this is because it is crucial to have a strategy and a plan in place when it comes to stacking precious metals. Everybody out there who has been watching my videos for a while knows I employ the DCA strategy, the dollar cost average strategy, which means I set aside a certain amount of money and buy that amount every month or every quarter, depending on how the market is developing. I never buy when the price is running up, and I try to time my buys when the price is actually going down. And just before we get into the numbers, I want to say this. Be careful who it is you listen to out there, especially when it comes to listening to people on YouTube, because there are a lot of malcontents, pessimists who do stuff like this. So here it is. This is what these malcontents do, and they'll pick charts that fit their narrative, and it's never the same chart. It's always changing, and they'll say things like, "Oh, take a look at oil over the last year. You should have bought that. You know, I tell you so." Or silver's a horrible investment. If you take a look at these 2 data points over the last 10 years, it's actually done nothing. And I hear this all the time, especially when it comes to Bitcoin. Oh, the digital fake money is over. Here, take a look how far it is from the all-time high. And even if you look in the deepest, darkest corners of YouTube, you will also find people who will criticize the stock market, especially right now, on its way down, and say, oh, look, the stock market hasn't done anything over the last 2 years. And that is because they're cherry picking. It's not honest. And it's true that not all savings mechanisms or investments are good. And you may disagree with me on a point or two. That's perfectly normal. That's what the comments section is for. But picking 2 spots on a graph to prove your point is not analysis. And you will miss a lot of opportunities along the way listening to people who do it that way, because in my opinion, it's simply a dishonest way, a way of cherry picking analysis in order to fit a narrative that you like or that you have. But to anyone who likes to use graphs that way, right now I want to show you a better way how to do it. A better way to evaluate the performance of an investment based on the DCA strategy, and let me know if you agree with this in the comments or if you see it differently, because here it is done for silver. So the first thing I do is I visit a site like MacroTrends.net, and I will link that up in the description of the video. And this site offers historical pricing data on a lot of things, silver included. And here's a log scale of the price of silver over the period they cover. And what I want to note here is that although I can learn from these highs and lows that you see on the chart, they are not the most important data points when assessing the value of an asset based on historic performance. So what it is I'm looking for is, if I scroll down a little bit on this page, just under the graph, you will see this. And in my experience, if you are investing in silver the right way, by dollar cost averaging, which means, of course, buying the average price, you should be more interested in this set of data, which shows the average price over time, versus getting carried away focusing on the annual high or the annual low. Because if we extrapolate data on silver for the last 10 years, as our commenter has suggested, we actually see this. And instead of seeing it the wrong way at a 44% drop since 2012, we actually see that if we dollar cost average into silver, buying the average price every year since 2012, we actually, today, we would be sitting on a 5% nominal gain. That said, we do have to accept a difficult truth when it comes to silver, and that is that it hasn't actually fully hedged against inflation over the last 10 years. With its price going up by 5% in the example that I showed, despite the fact that inflation has, of course, been much higher. In fact, it's been more than 5% just probably in the last 3 or 4 months. And as I said, that is a truth we have to accept, but it does come with some caveats. So remember these rules for stacking, and I'll show you exactly why in a second, but here they are. Number 1, don't buy run-ups, especially extreme run-ups. And by looking at historic data and blow-off tops, we can kind of begin to understand when these extreme run-ups are happening in order to avoid them. Number 2, try to focus on buying the dips. I know sometimes psychologically this is difficult, but when the price of something is coming down, especially an asset that you have conviction for, the price coming down is usually a sign of an opportunity rather than something to be scared of. And number 3, as I alluded to in point 1, use the price data I've shown you to choose your entry points. And that way you will increase your chances of avoiding buying the tops and increase your chances of buying the bottoms, or at least as close to the bottom as you're going to get. Nailing the bottom is really difficult. And the reason it's important to follow these rules is, yes, silver did have a blow-off top back here in 2011 and 2012. So did gold. And I have explained in past videos that a big part of that was due to the smart gadget revolution, as well as increased stacking as a response to what was called QE2, or the first huge wave of modern governmental money printing. But the main point I want you all to take out of this video, especially when faced with criticism about your gold or silver stacking, is that a lot of time passed between here and here. And if you stack the right way, I am confident you have at least kept up with inflation. And if you want to see a video detailing how to pick better entry points and avoid the bad entry points, let me know right now in the comments, and I will show you what metrics I look at when determining how much of my DCA money I use at any given time. And before I finish, I just want to share this little bit of news with you all, because it is very important for anybody stacking gold or silver. Take a look at it. Here it is. My very good friend, fellow stacker and real estate investor Philippe sent me the link to this article, and it explains how countries in the East, countries historically demonized by the West and often manipulated by the US dollar, are developing an alternative. A currency backed by a basket of different commodities, and it's a very good read. I will link it up in the description below for you to read, but I want to say this, it absolutely underlines the growing importance of investable commodities like silver, like gold, as a reaction to money printing and US dollar manipulation. With that, I thank you all for watching. That's it for this video. Make sure if you haven't hit the like button yet, please drop me a like. That does help this message get out there. Leave me a comment. Let me know what you think about this topic and if you have a personal strategy on how to maximize your gains when it comes to stacking precious metals. That said, thanks again for watching. I do hope to see you in the next one, everybody. Take care of yourselves. Adios.